Welcome back all. It's been a little while, a couple of weeks. Bits been going on in the world of markets and news and economies. So great to be back in front of everyone, and great to have Brad and Arnold back here. So Joel Seach, Principal Advisor, Harpel FG.
Arnie, tax professional.
Brad, generalist.
Generalist.
I'm just taking that title.
Guys, what's been happening? A bit been going on in the world. It's good to be back in front of the loyal listeners to go through all the different changes all around the world, and both markets and everything else in between.
Mate, there's been so much going on. Like, obviously, three things that spring to mind. Number one, Russia and Ukraine situation. Number two, we had Biden's State of the Union address. And number three, the Federal Reserve in America had some comments, and Jay Powell had some comments on interest rates there. And as we know, our Australian Federal Reserve Bank of Australia. What's the bloody title? I've just gone blank.
RBA,
Reserve Bank.
Reserve
Bank of Australia. Thank you. Obviously, they'll sort of pay close attention to what's happening over there and follow suit, because we've got our own inflation problems. So, do you want to start off with Rivkin's rules, and then we'll jump into some of those large?
Sure can.
Economic issues.
Alrighty, Rivkin's rules. All right. Renee on sex and relationships. Don't expect the opposite sex to be rational. Fat and unfit people aren't as good in bed as fit people. Couple of random ones.
That is, do you know why that is so hypocritical? Because Renee later in life was like one of the fattest dudes ever.
Yeah, he doesn't look too slim in the photo.
Yeah.
Basically saying that he's not good in bed. That's
self-deprecation from Renee.
Self-deprecation, yeah.
He must have wrote that when he was a youngster, because when he was young, he was a handsome little rooster. But I don't know. Anyway, that's neither here nor there.
Anyway,
he's odd. Cool. So, where do we want to start with, guys? Do we want to, I guess, start at the transgressions in Eastern Europe and flow on from there as to, I guess, how that's fed through to all the markets? You know, today, I guess, you know, we've got the overview of the human toll and whatnot. It's just horrific, and no one likes to see what's going on. And it's it's just a really bad kind of time to see that sort of dictatorship happening in Russia and Ukraine. But I guess what we want to try to focus on here is more so understanding that, but then focusing on how that's impacted markets, just to explain a bit about how money works during these periods of times and how that then flows on to investment markets and so on and so forth. How's that sound with you guys?
Yeah, and I think also just talking about it in relation to not just markets, but probably also what do we see it impacting in terms of like resources and goods and what
economic.
For instance, like 70% of the world's neon,
right?
Which already goes into a semiconductor problem at the moment in terms of shortages that only kind of exacerbate the problem. So I think we could kind of talk about markets and then flow into resources.
So definitely not ignoring the human toll at all, but money in the tank. We want to chat about markets and economic activities. So we'll sort of explain, I guess, in layman's terms as best we can what all the different things mean. And Arnie, what do you want to start, mate?
Well, no, you hit the nail on the head, and I think Brad sort of what he mentioned about natural resources that flow out of Russia is what springs to mind. And I know that we all had a look at that. What was that bloke's name? The video you
Patrick
showed around.
Boyle.
Patrick Boyle. Like, I feel like he succinctly described like how much of a producer that Russia is in key areas, and obviously
and Ukraine,
and the Ukraine as well. But aside from neon and obviously semiconductor
wheat.
It was obvious semiconductor reasons, and the fact we've already got semiconductor issues and shortages and bottlenecks. But I think one thing which hasn't been sanctioned by the US and the Western world is oil and gas. And I think that's incredibly important, because going to the human toll, if those things stop flowing out of Russia, that's going to cause a lot of human suffering in all the countries that they supply oil and gas to. And as you can see here at the moment, and you might have seen news articles from overseas, there's already like massive issues with price for petrol or gas, as Americans would call it.
And also natural gas, right?
And natural gas. And I think Russia might be the third largest producer of petrol in the world. And I think they may be they're up there with natural gas as well.
Just behind
America. I think they're number 2 to America.
They're number 2, and they do 10 million barrels of oil a day.
Yeah, and there's also, I think there was news the other day that Shell has actually struck an agreement with them to buy some of their oil, massively discounted prices. And even in the lead up to Russia invading the Ukraine, Russian oil was trading at a massive discount because people were worried about geopolitical risks and uncertainty there about doing business with them. So as we know, they've been disconnected from SWIFT, which is huge, and that's like a payments platform.
Well, not all banks, but the central bank has, and the majority of targeted banks. But yeah.
That's right. But what I was getting at, Brad, is that if things like that occur and those pieces of the supply chain that facilitate the movement of oil and natural gas and petrol, that's going to be really hard for those companies to take payment and therefore ship it out of the country. Yep. So it's just like a whole kerfuffle here, and I think we're going to start to feel a bit of the pain there.
Yeah, I think we're only 1 month. So we're 8 days in, or 9 days in, 8 days in, I believe. And I don't think that kind of has played out the pain yet. You've also got to remember that today, without Nord Stream 2 kicking on now, the majority of natural gas that Europe utilises, Germany utilises 60%, 50% of their energy supply today is in natural gas. And the majority of that, as much as some goes around Ukraine, you still got 30, 40% of all the gas into Europe provided through Ukraine. So even if you kind of look at sanctions, you look at whether Russia turns it off and on, you still got the chance that these pipelines get also sabotaged during it. So it might not even to do with geopolitics. It could just be due to the what's going on in the country. And I think that you got wheat. 30% of the world's wheat comes out of Ukraine, Russia and Ukraine together.
Corn.
You've got palladium and platinum, third and second, which are made automobiles as well in catalytic converters and the rest of it. I just don't think that those sort of things, because of the response time was so quick and swift around the world, I don't think we've actually seen much play out except for in the markets, Joel. And I think that's a good segue probably to
markets.
Talk about the markets, because I think that
it was a great forward predictor, aren't they?
Yeah, I think that the markets are obviously predicting certain things, but I don't think we've really seen the play out of what can happen, because at the moment it's still very cold. We're in March, but it's still very cold in Europe.
Speaking of food, Brad, I was talking to a mate of mine. He was saying that this might be a bit outdated, this information, because I was talking a couple of days ago, but he said if you went long corn commodities, maybe let's say 8 days ago or whatever, or at the very start of this issue with Ukraine and Russia, you would have 6 times your money straight away. And that's exactly what you were saying, Joel. The market is a great indicator of what's to come. And if prices of corn have gone up that much, in a week or a bit more than a week, that price is going to flow through to the shelves. And anyone that has to buy up, food supplies like that, and wheat's obviously a massive one that goes into heaps of stuff, it's going to be incredible pain for not just people in that local area, but it could flow through to us as well. Maybe we have to step up production where we can of our wheat. And I think Joe Biden might have even referenced Australia in one of his speeches and sort of said that we had there's definitely a news article about Australia's bumper wheat crop and how, was 5% larger than expected. But that's still a drop in the bucket when you're talking about the world.
And we're very far away from, when they start to talk about that, and also natural gas, if it did get turned off, Asia could supply Europe, we could supply Asia. You're talking about massive logistical changes.
And contracts as well, mate. Not to mention, we've got a lot of natural gas offshore in Australia, but that's all contracted by, the big...
South Korea, Japan, et cetera. So, yeah.
So we're already feeling a pinch of supply-demand economics through COVID and from the repercussions of what we've gone through there. So that was when you mentioned automobiles before and having things integral to automobiles, they were already struggling on a supply factor. So this is going to, it's adding pain to an already strained area, which was slowly recovering, but it's probably going to prolong that recovery now. And as Arnie said, logistically, it's going to be, potentially other countries cushioning the blow and making adjustments. And look, Australia, I don't know if we have too much direct correlation with Russia, potentially from a trading partner. It might make up a fairly small, maybe make up a small portion of things. But indirectly, things will flow on and be impacted, and we'll end up feeling the pain as consumers just generally because of all the input prices that have already been stretched a touch too. So, keep an eye out for those things going on. Other things that have been impacted is the Russian currency. The ruble's been devalued significantly because of the getting out of that currency. The US strengthens on the back of that. You see bank runs, which is where people will go and get their money out of the Russian banks there because they're worried about that. They're worried about their currency being devalued. You see some of the Russian billionaires' assets have been seized overseas as well. Even your mate from Tesla got a mention with Starlink coming to the party to help out Ukraine, Arnold. So Tesla
and also ISS, also the International Space Station, because they're warning them.
Drinking game for those at home. Tesla gets the mention. So Starlink's Starlink, yeah. So they're coming to help out with Wi-Fi, I believe it is, an internet capability, satellites to help out Ukraine because modern warfare, so to speak, you need that kind of resource to help.
And as Brad mentioned, you were saying about the ISS, Brad?
Yeah, I was saying that due to sanctions, the Russian space agencies came out and kind of threatened inadvertently that they'll let the International Space Station just fall to Earth because they're the ones whose rockets are actually keeping it in orbit. And then Elon Musk came out and just said, no. Basically, he just noped them on Twitter. It was quite amusing. And said that he would just fire up one of his rockets and send it and connect it to the International Space Station. He is the modern day Iron Man. I will definitely give him that.
Love that.
Yeah. I think
it's so good.
One other part I was thinking of is I know that there's been certain political moves in countries in response to the conflict in Ukraine. And just a few notable ones is Germany, who's been a pacifist state since the end of World War II, has started spending big on military funding. I think they said they're going to...
They've worked on Germany.
Yeah, $100 billion. And then
2% of GDP moving forward.
2%, which is massive.
Is that going towards NATO, is it? Is that going...
all the military, which inadvertently is NATO.
So part will be contributed. Part will be contributed to NATO per the terms of being in NATO, and then part will be their own military. But I also note that they have put in political policy to accelerate their push to renewables to end their reliance on Russian fossil fuels.
And I did read that, because I think I saw a Trump boardroom meeting from years ago when he was having a crack at NATO and Germany directly about how heavily they purchased from Russia, yet they're now they're sort of making moves to bolster their defence. It's like you're buying from one hand, you're bolstering on the other. It's sort of
This has been going on for a while. That kind of warning's been going on geopolitically for about a decade, and it's come home to roost now, which is... So, but I hear what you're saying, Arnie. They're trying to push their renewable energies now to maybe help with expedite that process of being so reliant on the energy they're getting from Russia.
Well, I think you're going to see that around the world. I feel like even if you don't get policy from governments, I feel like this is going to make people reconsider purchases. Like, for example, in my own space, and this is obviously observational, but it's made me think, should I be getting an electric vehicle sooner rather than later? Because I had thought I'll wait a little bit because Australia, we don't really have the infrastructure for it. But then I just thought, if petrol prices are going to go through the roof and there's no relief in sight in the near future, does it make sense to get an electric vehicle? And if you're in a country that has better infrastructure, it's almost like a no-brainer. So obviously that's got its own supply chain constraint problems with the things they require for batteries and stuff. Yeah, exactly. But it just made me think about it. And the other thing I was going to mention was Sweden also started sending supplies to Ukraine, and they have traditionally always remained neutral. So was it Switzerland or Sweden? I always get confused, but one of them.
No, Sweden did, and Switzerland is actually going in with the sanctions. Thanks.
So there's a lot going on here, and there's going to be a massive fallout for the markets and for the human cost.
Also got Finland, mate. Finland, which is also one of those non-NATO kind of neutralist countries, is now supplying, as of yesterday, weapons to Ukraine. So there's a lot of geopolitics that is happening in the world that we haven't really seen how that's going to play out in the broader sense.
And from a costing to Russia, I think it was maybe one of the podcasts that you sent us.
20 bill a day.
Yeah, 20 bill a day, isn't it? Just the cost of or the direct cost of running this war, or the indirect cost that's costing their economy
Yeah, indirect and direct. Yep.
Yeah, and the thing they talk about, I guess, with divestment and shutting off with these sanctions, it does take a while to flow on, but they'll feel the pinch for many, many years to come for making this decision.
Yeah, I mean, they've also got the central bank that, Russian central bank of theirs, 625 billion, 400 billion has been frozen because it's in international accounts. So you had, I think, like 12% of their central bank was in gold, which they store themselves. About 15% was in China, which is pretty safe. But about 400 billion has been frozen internationally. And, even if people could transact with Russia, they can't get money into because of the sanctions on the banking system.
Yeah.
You've definitely got the pain, because you've even got shipping companies like Maersk and stuff like that are no longer shipping to Russia.
Yeah.
So it's like on all fronts, right? Everything but really Coca-Cola has stopped going to Russia, and I think that effect is hurting the people of Russia a lot.
Yeah,
and that's going to be the hard thing, because generally the people that will suffer the most, right?
There's a few other points about that as well. Like, just speaking about the Russian markets, you're spot on, Brad, about like 2/3 of their money being like stopped. At the same time, they're undertaking initiatives to repurchase their own securities to try and keep their stock market propped up. They've forced international investors or traders to only be able to buy. There's no sell orders available.
Raising interest rates to 20%.
Yeah, and I think in certain brokerages, you can't even transact on the Moscow Stock Exchange. And
they've
just
closed
today,
they've closed the stock exchange, haven't they?
Yeah, they have.
For a period.
For 3 days or 4 days now.
The last time the Moscow Stock Exchange was closed for this long was 1917.
Yeah.
And it didn't reopen for something like 75, 80 years after that fact.
That was the Bolshevik Revolution. That's a pretty big one, right?
It was massive. But then the other interesting thing is that RSX, which I think is RSX, which is a Russian index where you could trade, like, on the US markets, for example, has also been stopped, like on a number of brokers, and you can't get access to it anymore. So, yeah, there's massive repercussions for
Australian super funds and future funds have divested. I was reading this morning that your big players, your Hesters, your Colonials, your Seabuses, your Uni Supers, they were sort of holding off divesting because the market's taken such a beating over there, and they'll be taking a hit on it. It's only a really small portion of their overall funds under management and wealth, but the government sort of caught their hands a bit and said, are you in this or not? So they've made all of them have really made the decision to come out and say, well, we'll be divesting as well. So it'd be interesting how those trades go down if the markets are still closed for a bit, how they get out of that position.
And last one on the industry side, you've also got the S&P and Dow Jones that have removed or will be removing all Russian stocks from its indices. So, yeah, I mean, it's pretty, totalitarian in terms of every impact of Russia. And I guess, the flow for markets, right, into that. I mean, I can speak for crypto and say, there's been a bit of an increase. I think, whether that is your everyday Russian people due to the ruble going down, trying to just find a safe haven and getting into crypto. You saw Bitcoin kind of run up from, mid-30s to about mid-40s and then drop back down to just below 40. You've had Ukraine. I mean, in terms of dollars on an overall crypto, it's not that much, but Ukraine have taken donations of 54 million US in Bitcoin.
Yeah.
And so it's going to be an interesting. If you said that like a whole country is taking all of its donations in cryptocurrency, and you told me that that was going to happen 5 years ago, I'd say you're dreaming.
It's interesting, isn't it? It's where Bitcoin's coming to its own in terms of a perfect example of where it can help protect against your currency being devalued and smashed.
Well, even if it is, you're preserving your wealth. I think that's really highlighted the use case for crypto and the more stable, which I would consider only to be Bitcoin and Ethereum. I mean, obviously there's other ones, but those two are the main ones.
Yeah.
And I feel like I really hope this is a positive catalyst for those asset classes moving forward, because if you want to call it the bull case, the bear case, like the bull case, it is obviously showing that it's it's decentralized. Governments can't control it. You can move it as long as you've got an internet connection, which means you can preserve your wealth. But on the other side of the case, that's also highlighting to governments that can happen, and they may not want that to happen. They want control. So
That's the interesting conundrum. We've seen
that's
that
where
play
it'll
out.
be this. It'll be
We've seen
interesting to
that
see how it
play
play
out
out.
the past couple of years with certain countries banning Bitcoin,
Like China and stuff.
and then we've seen some countries adopt it. Like, what's the country in South America? That El Salvador. You know,
Russia recently, right? They went to ban it. So, 6 weeks ago, Russia said, central bank came out saying we're going to ban it. Then the other banks about 2 weeks later said, "Oh, I don't think we will." And then there was like a white paper that came out saying, "I think we're going to make it a part of the economy." And then a week later, they made it like a national tender.
So so things can still be run by governments, but it's just, it does give you that alternative asset that might help with diversification of your overall wealth preservation and situation during times of crisis like we're seeing at the moment. So more to play out.
It's going to be an interesting use case to kind of, obviously I'm more bullish than bearish, only because it is decentralized, and even if the government wants to ban it, like we've seen in China and the rest of it, you still have access to exchanges, you still can get on, you can still change it for fiat currency, you can still transact without people knowing, but I mean, it's going to be interesting to see what happens with like FATFA and, if they get around the sanctions, how much people are not willing to then deal with it and exchanges crack down. So there's definitely a bear case. I think it's going to be a pivotal moment. Because anything new like that has to go through, generally it becomes mainstream once it goes through like a catalyst, right? And I think this may be the catalyst for one way or the other. Let's just say that.
Like you sort of got to think about it, because like if a government, or let's say it's an authoritarian government like Russia's highly nationalistic government, says that they're banning Bitcoin and making it illegal, then it becomes like the moral and ethical objection. Like, do I go outside the bounds of the law and use the networks that are available to me to preserve my wealth? And I feel like if you're thinking about like the Russian people who are basically innocent in all of this and have, no say, then they should be, like, in my mind, morally able to make that choice. And I think it's good that it's available to them.
And even like morally, like from a country perspective, if you're looking after, most people look after their own first, right? At the end of the day, if your family's in trouble or you're at like financial risk and you've got an option, I just go like humanity generally will pick the option to kind of ensure that they
and it just goes to show that, governments don't really care. Like Russia's gone and said we're banning it, and then 4 weeks later, maybe we'll bring it back in. No,
India did that. China's talking about it.
Yeah, so governments don't care. They just want to sort of do what's in their best interest. So essentially, as a person, as a family, to try to protect yourselves and your ability to be able to afford to put food on the table, that I think comes paramount before a government that wants to start a war with your neighbouring country and make their own decisions about that impacts on your life too. And as you said, rightly so, Arnie, I think the majority of people in Russia don't agree with this, but potentially are scared to speak out about it as well. It's a very tough situation to be in. You see a lot of people just peacefully protesting, getting pulled away to who knows where.
And the markets-wise, though, I don't think. Correct me if I'm wrong. Like all Nasdaq, etc., it's all been pretty flat over the last month.
Got hit pretty heavily last week upon the commencement of the war, and then
a little bit of a bounce.
There's a few days in a row where it got hit, pretty significantly. I think it was the All Ords copped a good one, like 190 down one of the days last week, and then it's slowly but steadily just been sort of regathering back up again and been positive for most of this week. We're recording this on a Saturday, so I think the first negative day from the All Ords might have been on yesterday, Friday, but it was only slightly.
We're at 74, 73 before, and we dropped down to 72. So we went from 74, 73 down to 72, 53. We bounced back up to 74.
Yeah.
So,
I think largely the markets in the Western world that are like highly insulated from any effect saw exactly what you boys talked about. Like, it was a big drop and then a bit of a recovery. But if you look at European markets, specifically ones like the FTSE, or ones closer to the conflict,
directly impacted.
Yeah, they are still seeing like bigger, larger effects, which makes sense. So it's a good segue. But what are you going to say, Brad?
I was going to say that I also think that the markets have been. This is something that there hasn't been a warfare like this on the European continent since 1945, and so I think the markets also have probably been banking in that. It'll come to a closure sooner rather than later. And I think that the longer this goes on and then the supply kind of and logistic problems start to occur, I think that's when there'll be kind of a re-rating, right? If the war hasn't stopped by then, I think there'll be a re-rating within the next, 2 to 4 weeks if this continues at this level. of disruption.
Yeah. What could cause the Western markets, the insulated markets, to really react to this would be if they're drawn in. So if something were to happen to a NATO country and we were forced as a NATO alliance to enter, and exactly like you said, it's like, think about industries at the moment which are benefiting. So an easy example for me is steel. Steel industries, especially in America, are benefiting from inflation and therefore like cost increases of their own price increases, I should say, and they're bringing in like record revenues. However, if America was dragged into the war, then it would be very possible that those steel reserves would be rerouted to a war effort, and that would just crush that industry. Not over the long term, but over the short term, it would hurt them a lot, and that would happen to a lot of industries where things would be prioritized or changed. So it's but even like you said, Brad, even if they aren't dragged into the war, even if the NATO alliance isn't dragged into the war, the longer this goes on, the more pain we feel in our own supply chains, or even through humanitarian and
you
aid
start
efforts.
seeing the impact. You start seeing the impact of companies' earnings and the rest of it.
Yeah, and like in response to this, like this is a bit of a segue, but in response to this, we know that Biden had a State of the Union address during the week, and we also had comments from Jerome Powell, who's the chair of the Federal Reserve, and they both sort of spoke about this directly or indirectly. In particular, from Jerome Powell, basically sort of said that they're still on track to have some rate hikes in March. But he said that he personally supports just a quarter, so 25 basis points hike. Whereas, prior to all of this happening, there was people saying there's going to be 50 basis points out of the gate.
Inflation bull a month ago, and this has changed. My opinion of what I think. I mean, there'll be supply chain inflation, but I think some of the other inflationary kind of triggers are definitely. It's going to be like a wait and see, right? Because if the war wraps up the next week, maybe there is still. If it doesn't,
they're going to have to. They're going to have to try and raise rates anyway. Because I think on the last pod or the second last one that we did, we spoke. Like they've got issues. They've got inflation issues, and they need to try and fight it. And the way to do that is to raise rates. But obviously, they need to be agile and nimble, and that's what this basically spoken about. Is like they're monitoring it. They're still proceeding with their plan. But in the event that something changes, they're ready to pivot and change as well. So,
and I think he also said that, like, correct me if I'm wrong, paraphrasing. He also said something along the lines of it's probably going to be less rate rises than what the market has probably predicted.
Yeah.
So I think that was like a positive for the markets. And I think last night there was the US job reports. I don't know if any of you have seen it.
Yeah, the non-farm payrolls is up like 600K versus
678,000. Yeah.
And they were predicting what, like high threes or 4?
High threes, it was double that. So, I mean, unemployment rate's down to 3.8, and I mean, that doesn't include the participation rate being slightly lower from, 64, I think it's down to about 62. But, I mean, you're still sitting at around, let's just say 5% unemployment in the US. And so that's coming back very quickly. And so there's still definitely, obviously, the economy is ticking over. So inflationary.
The risk with rampant inflation is it can start to have so many different impacts in your life. I was listening to a really good podcast the other day that talked about a food delivery girl that was making a decent profit during COVID and whatnot. And then this inflation started to bite, and the cost of her just filling her car up has gone up by 30% or 35%, taking away from her profit she was making. So it starts to disincentivize the want to do work, productive work. And, inflation just can, if it gets a hold, can be such a bad hyperinflation, or significant inflation can be such a bad
killer of economies.
Yeah, it can really get you. So that's the reason for people listening out there that they will act, and it's just that risk reward and working out how much to act and how swiftly to act. And they've said they're going to do it, and they need to do it. And it looks like it'll happen. Yeah, most likely in March. Maybe just not the 50 basis points initially. It might be 25, and then they'll probably continue to do that until they start to see a bit more control. More, I guess, locally in Australia, that's what the RBA monitors and keeps an eye on. They have spoken about inflation and what they want to see from employment, and what was the other key measure that Mo wanted to see was employment, and one other key measure that he wanted to make sure was in line before they started talking about raising rates. Arnie or Brad, if you can remember.
Yeah, it was definitely employment, and I'm pretty sure I can't remember what the other one was, actually. I think the main one I remember is him saying he wanted to see all the economic indicators that they look at fall in line before they talked about combating inflation. But I think that rhetoric's changed at the last meeting where they confirmed that they would be looking to raise rates this year because inflation has gotten out of hand, especially in autos and homes, I think were the main ones.
And you see, I guess, with the supply input of employees and workers into the market, that I think the key thing to really help Australia, and it's a good thing, is having the borders open back up again and allowing that international travel come back in. You know, your tourist visas and your working visas and all those things, because that'll all flow on to help with the overall input and supply of workforce that's required to be able to keep the economy ticking along, keep those businesses going, keep those jobs in check, but also it actually helps spread the load of inflation, because that bottleneck of inflation of workforce, if that's not broad enough, then, you know, the demand of cost to serve will continue to go up more and more. So,
especially around food. Food's a huge
food, hospitality,
one. Food hospitality is a huge one that it kind of impacts in terms of, you know, a lot of the picking of fruit and vegetables and, you know, harvest time, the rest of it has traditionally been done by international workers.
And so, you lose that if you don't get it done, you lose that. So that's...
And the price goes up, right?
They've been really important. Yeah, so that's a really big thing. And that's a great thing to see. You know, you want to see not only for the economic side, but you just want to see that sort of travel occur again and return to normality and people able to kind of come in and do what they want to do, and just for life.
Where you want to, right? I mean, even my company, I mean, we opened up on the 21st, and on the 25th, we had US staff coming over to Australia for the first time in like 2 years, and just a little bit of normality. I mean, I was out during the week and catching up with them for dinner, and even just that, right? Even just going out for dinner with some staff from the US, just that in itself is a little bit of a tick to normality, let alone the kind of economic side of it.
I had a quick Google just Joel, just to check what Philip Lowe said, and you were right. He was saying that they've got the caveat on the raising of rates, which was to be patient with full employment. But in particular, he was saying that he wants to see growth in wages and labour costs fall in line where they should be as well. So I think that was sort of the caveat, but they have said that they're still aiming to raise rates, and they're still aiming to keep inflation between 2% and 3%.
Yeah, they've always said that.
Yeah. So, and he did make comment during the week about the situation in Ukraine, Dr. Philip Lowe, and basically same thing as the American counterparts. They're just keeping an eye on it. So they're going to proceed with what they need to do, and just
they'll acknowledge it. They'll acknowledge it, and they they try not to take a short-term view with these things. So they'll acknowledge it, know that it's there, and keep an eye on it. And they've invested.
They're not reactionary, right? They're not the type where they go, well, we've got this going on and it might do this, and they've got to go on the facts they've got at their hand at the time. So
interest rates is a medium to long-term thing, and all these indicators they take time to flow into market. They need to keep an eye on those indicators, and all these different facets and everything fall into those indicators and make up the numbers for them to view their decisions on. So they're not going to react too quickly to something, you know, isolated, as significant as it is, isolated to a war between a couple of countries. You know, the time I guess we saw was a pandemic when they really reacted quickly and they made some drastic decisions, but that was a worldwide kind of impact. So anyway, that's sort of some domestic stuff. Is there any other key points you guys want to touch on before we go to sort of some of our predictions for the year coming up?
Well, there was one more I want to touch on in Biden's State of the Union address.
Tesla?
No, well, it's actually not Tesla related. He was basically talking. It's actually not Elon, but I mean, maybe I could pretty much bring anything back to Elon if you want me to try. So
try, Arnie, try.
I'll try. Okay, here we go. So in the State of the Union, Biden was talking about. He was essentially talking about that failed bill that he tried to pass, which was called Build Back Better. And I can't remember the exact terminology he used, but he went to say Build Back Better, and then he changed tack and said, building back America or something like that. And he was talking about specific parts that are trying to get through their government system. But I guess it's sort of not. It's been slimmed down a bit so that the Republican Party will be happy and vote it through. And essentially, a lot of the chatter in the State of the Union was talking about bringing security of supply back onshore into America. And what I wanted to mention was he talked about semiconductors, and they talked about, and obviously this is going to benefit American semiconductor manufacturers. And the two that spring to mind are Intel, obviously the behemoth, and I was going to say Micron as well.
So Samsung is investing, I think, about $100 billion into semiconductors in the US.
Yeah, well, that's what they're talking about. And then you've got, like, I think Intel is also investing a lot with their own foundries, and the government's going to support this. So they were talking about things like that. And if you want me to bring it back to Elon, then part of that spending is going to flow through to things like auto manufacturing as well. So you can kind of connect it back there as well. But it's just an interesting part of the economic landscape that took place, and it was overshadowed by obviously the massive things happening in Russia and Ukraine. But
I think if Russia and Ukraine wasn't happening, it'd be a lot bigger, Arnie. I think is the in terms of news, because I think this is the play out of the last few years and the realization that countries are very, very, just-in-time logistics and supply is probably a thing of the old world now.
Yeah, globalization has taken a hit because of this, and it's not because of obviously the issue with Russia and Ukraine is highlighting another reason why countries will want to do this, but it was basically born out of COVID. Yeah, so they're thinking we need certainty of supply, so there's no issues like you've seen with trying to get semiconductors out of Taiwan. So,
and I think part of it's also that as well, which is future risk of Taiwan being in the South China Sea and protecting kind of Western world and America from future conflicts. So, but I think it's huge. I think Intel's spending about $20 billion on 2 new factories as well. So it's going to be massive for the kind of US, on top of the infrastructure bill as well. You've still got to remember that did pass, and you've got about $1 trillion over the next decade getting put into infrastructure throughout America. So there's going to be a fair bit of spending in the US to come.
Yeah, they passed that one, but that wasn't the Build Back Better.
No, Build Back Better was, Build Back Better and the infrastructure were actually one bill.
They split them, right?
And then they split them and promised that once they vote on one, they'll definitely vote on the other and they'll pass it. And then so you've got your progressives and the left that voted with it, and then bang. It's going to be interesting. And we've also got 2022 mid-year kind of midterm elections happening in the US pretty soon as well. And our own federal. And what's it say? And about to say that our own federal election is going to be kicking off for the next couple of months. So
and our state later this year as well, right?
Victoria, November.
I guess that probably means a lot more now than it probably did in the past. I haven't been here, guys. I only got back about 2-3 months ago, so the Victorian kind of politics hasn't really impacted me too much. But
for the listeners out there, the RBA as well, you won't see the RBA make any decisions during an election campaign, generally speaking. So that's another thing to note as well for listeners out there.
We presume general advice.
We're pretty confident though the RBA won't make any kind of rash decisions before the election, which will be federal May, I think, around May.
Yeah, I think May is latest, right?
He has to. I think ScoMo has to call it before March. End of March,
right?
Yeah.
Before May is the latest.
I think so. Yeah, I think you're right. But
anyway, we don't have, for those listeners that are overseas, we do not have long election cycles.
No, not like America.
Campaigns,
Quick campaign.
All right, so as we promised last week, boys, we're going to do some predictions on where we think certain things are going to happen the year. So the ones that we've come up with as a team are we're going to do All Ordinaries, NASDAQ, Dow Jones, gold, Bitcoin, and Australian interest rates.
Cool. So All Ordinaries is the bulk of the made up of the indexes in Australia. Dow Jones is the companies in America, so that their version of the All Ords, or our All Ords is probably our version of their Dow Jones. The NASDAQ top 100, which is the tech company top 100 in America, made up of market capitalization. Bitcoin, BTC in US dollars for Brad, but generally I think everyone follows it in USD. RBA interest rates, so what we were saying before, and then the gold price per ounce.
Yeah.
So,
are we just going to rattle them off, or we're going to go one by one?
Well, let's all
one by one, because then we can compare our own.
Okay.
So all ordinaries. So we want to do each person all odds, and we're going to go through the list.
Yeah, no, let's do each person all odds, and then we'll go to the next one.
All right, so I'm going to go all odds. We're sitting at 7,400 at the moment, guys, or thereabouts. I'm going to go with 7,850 by, we're saying December
calendar year. Yep.
December 30.
Yep. So Joel, 8?
7,850.
Yeah, cool. I'm just jotting these down.
I'm going to say we'll bring this back. These down, and there's no prices riding, boys. We can't come in with 7, 8s, 4, 9, and think you've won the outcome. No prices riding anyone.
Oh, so it's I can't say $1 above.
No, not one or above
you go
or below.
10, fine.
I'm actually. Yeah. So are you gonna say why you're bullish on growth in Australia, Jolly, or we're just going to predict
It'll probably
it?
take too long if we start drilling into it too much.
Yeah,
But
yeah,
if everyone has their answers written down, you can't come off your answers.
Or if anybody's got any questions about specifically choices, just put them in the comments.
I guess we could talk about it at a later date, but let's just do the predictions. All right. Well, I'm also going to say that the all is going to go higher, but I think it's going to get around 8,000, which I think is that an all-time high? I don't know. 8,000. What did it reach?
That'd be close too, I reckon.
I think it's been 7,823. What I'm looking at is the all-time high. I think we're going to break it by the end of the year and hit 8,000.
Yep.
And then the bear comes along, 7,150.
Down a bit. There you go. All right. Good.
Not down as much as I would have said. I'm being a little bit more bullish than I was.
I really want to know your justification. We'll follow it up in another one. All right, moving on though. So which one are you going to do next, Charlie?
I've just written down the row here. So Dow Jones. I've got the Dow Jones at 36,950.
I've got it at
33,614. Yeah, I got 33,614.
Oh, sorry, that was my guess. Yeah, currently it's sitting at 33,614. My guess is end of year 36,950.
Okay. You think 36,950 by the end of the year? All right. Well, I think
36,949.
Not that I want to.
I need those answers written down. We need the answers written down, guys. So we can't.
I'm writing down. Don't you worry.
I would actually put it at a very similar level to Joel, 36,950. So I'm just going to say, for the sake of it, just say 37.
Now that's what I'm saying. Write your answers down on a bit of paper now.
Joel,
so when
Brad's writing them all down.
No.
He wants you to do it ahead of time.
You want me to do it ahead of time?
So you're not just coming in and saying, oh, yeah. So let's just get him down on paper ahead of time. Brad's taking the responses, but proactiveness here, guys.
All right, hang on a minute. Let me write. All right, so I'll do my other ones ahead of time then. So we'll let Brad do his Dow Jones one and I'll write mine down ahead of time.
Oh, well, thank you. Again, I'm going to be the bear and call 32,000.
32 for Brad.
It's basically flat, but just a little bit down.
Cool.
I think we'll end up. Yep.
NASDAQ 100. I've got down here about, what have we got? 15,250. Because the NASDAQ, it's currently sitting at 13,837, I should say, for the listeners. I'm guessing 15,250 by December 31. Mainly because growth tech companies have had a pretty good run and they've come off a bit, so not predicting as much. But yeah, 15,250 for my guess.
13,250 on the NASDAQ. So you think the NASDAQ's going to come down from where it is?
No, 15,250.
15,250. NASDAQ's currently sitting at 13,837.
Oh, sorry, I'm with it, 15,250. All right, well, I have said 16.5 for the NASDAQ.
All right, beautiful. Bradley, you're still going with the downward trend?
I'm going to kind of just say that it's going to settle basically where it is at the moment, about 13.5.
So I reckon your next guest will be an upwards trend because you're skinning the game with Bitcoin. So,
we're doing gold. We're doing gold next, aren't we?
He's trying to say I'm biased. It's not what he's trying to say.
No, not at all. Not at all. You're an optimist. So you want to do gold out, Arnie? Okay, mate.
Yeah, go on.
I'll go out of order of what I'm doing here, but the gold ounce currently we've sort of said is sitting at about 1,900 currently in USD. I'll predict 2,000 by end of year. Nothing exciting.
Yeah, I think it's going to come down to around $1,700 mark.
Oh, I'm a bull. I'm 2.7, boys.
Hey,
wow.
There you go. Likes
so Joel, what were you?
Two grand flat. Likes his precious metals.
Arnie, what were you?
1,700.
And 2.7. I should just gone 2.1 and just been happy that I was over.
2.7.
That's why we have the answers written down beforehand. Yep. All right. So we've got Bitcoin written down, guys. This is the one I was inferring that Brad might be. But I'm actually a little bit bullish. I reckon 53 USD by end of year. It's currently sitting at 38K USD for the listeners. So I'm guessing 53. So a 15K increase by end of year.
Oh, I'm not a crypto. I am such a crypto nerd. But I think I'm on a SHIB. I know SHIB back to front. But, I actually think Bitcoin's going to be around 35K end of the year.
Little drop.
Yeah, I think it's going to come down.
Bradley?
35. Well, I'm just going to go. So 50. What, Joel? What were you?
53. Brad will be in the 90s.
close. Hey, look, I'm bullish. What can I say? And Arnie, sorry, you were
35K.
About 35.
He's a glass half full kind of guy when it comes to crypto.
I actually think it's going to go lower and then higher. So I think we're going to end up with about 75.
Oi, 75 in the year. And
which is not a new all-time high.
General in nature, guys. General in nature.
Oh, totally general in nature. Guys, don't follow me. I can tell you now. My crypto over the last 6 months has not been good. And then RBA interest rates.
Yeah.
So, RBA currently, for the listeners, is sitting at 10 basis points, which is 0.10%. I reckon the next move will get it to the 25, and then by the end of the year, so they'll just do a 15, and then by the end of the year, we'll be at 0.75, which is still very, very low in the grand scheme of things.
Scheme of overall things. Yep.
Yeah. I think we're going to hit 1%, 100 basis points by the end of the year.
I'm one as well, so.
Yeah.
All right, cool. So 0.75 for me, one for the boys.
That's it.
As always, guys, general in nature, seek your own personal advice from an investment professional
100%.
whenever you're making decisions around money, advice, or planning. So this is just our personal thoughts and having a bit of a guess generally about what we think the indexes will be at the end of the year. And we could be incredibly off, but we could be get bragging rights for being more on than off. Brad's taken the notes. He's got the answers. We'll revisit this for our last episode of the calendar year, and we'll have some kind of made-up trophy for the winner.
I love
Rifkin
it.
trophy. I like it.
Oh, a Rifkin trophy. That's awesome.
Rifkin trophy.
So do we want to select a date, December 31st for the finite date, and we try to do our podcast around that time frame? What do we want to do?
Yeah, let's lock in an early January podcast, and 3rd or 4th of January, and we'll partake in this.
I love it. All right, well, that brings us to our last segment, which is going to be, well, it's normally 50-50, but we're going a third today. And do you want to read out what it is, Joel?
Yeah, so the boys were chatting and brainstorming before about the best 50-50 to go with. The suggestion was Pokemon and characters of Pokemon, which I've got no to little idea on. Dragon Ball Z, which I've got probably less of an idea on. So I said, why don't we do favourite childhood cartoons growing up around that field? So I've thrown in Captain Planet because I just don't know enough about Pokemon or Dragon Ball Z. I'm sorry to the listeners out there. There's probably going to be some upset people. Pokemon I know a bit about. Dragon Ball Z I know they've got like Super Saiyan levels, which is always funny to watch when they go up to like extra Super Saiyan. But Captain Planet, love a bit of Captain Planet. The Heart guy was a little bit less relevant, I found. You really had to sort of force him into episodes growing up. It was like, what can we call on here? Let's get Heart guy in. But yeah, I like the Fire guy and the Earth guy growing up, Captain Planet.
Yeah, so we're going to pick our favourite of the three. Okay, if I'm picking my favourite of the three cartoons, I think I have to go with Dragon Ball Z. I feel like that was just the greatest cartoon, even though some episodes would just be a total waste of half an hour.
What do you mean? Just like half an hour? It would have intense music.
I remember coming and watching my brother and just having like side-to-side kind of face close-ups of sweat, perspiration, and like yelling. And
then little lightning bolts.
Yeah, I'd actually worry if someone had what's the thing where you have like issues with bright lights and stuff. If you
epilepsy.
Epilepsy. You come into an episode like that, I reckon that could be a full-on fit.
I'm going to Dragon Ball Z as well because it was like the most intense cartoon. I watch it every day. Followed it, and I don't know why. When I was watching it younger, those wastes of, even though you kind of felt like more could happen in an episode, you're still excited even if they're just charging up because you knew something was going to come. Because I rewatched it recently, and some of those episodes are pretty slow.
I don't have to watch it.
Not much going on anymore. Like they just yell for like
a lot of screaming, a lot of yelling,
25 minutes.
A lot of screaming, a lot of charging up. What's the highest Super Saiyan you can get to?
Oh, who knows, man? I think back then it was like they could reach that monkey form, which is like wild. But I think like it's gone beyond that. Like in canon, I'm not familiar with it now. But
wasn't it 1 to 4 or 1 to 5? Is Super Saiyan 5?
Back in the days, it was 1 to 4. But I think they got up to now. Just quickly because we just Google things. There is 17 levels.
How's this for nerding out? Talking about Super Saiyan levels on a market economic podcast.
Well, can I say
Perfected Ultra Instinct is the highest level. So
like Jolie Jolly won't be able to answer this one as well as us, but I'm going to put it to you anyway because you just admitted that you never played Pokemon, the games, Jolly. But let's just say if you had to choose water, plant, or fire, which is Charmander, Squirtle, or Bulbasaur, which one would you choose as your starting Pokemon? And I always used to go fire, even though it was the weakest, because it's just I'm all
whichever
about
whichever card's worth the most money on the secondary market.
Fire. Charizard.
It's not. It's a video game. It's on Game Boy, Jolly.
No, don't they sell Pokemon cards?
Charizard's at the highest cost.
There you go. So that's what I'd go for.
Okay.
Investment grade Charizard card.
Investment grade Charizard.
I like it.
I'm going to try and buy you some sort of Charmander NFT for your birthday or something.
Yeah, I know the word evolve. I remember came into play with Pokemon evolving, but I could never get Anyway, I'm sure people have switched off by now, unless you're a nerd like us, or these guys that love Dragon Ball and Pokemon Z. Thanks for Pokemon Dragon Ball. Thanks for tuning in, guys. It's been a pleasure.
And if you want to get us at Money in the Tank on Twitter, Facebook, Instagram, YouTube, and drop a like, comment, subscribe on the video.
Yeah, hit us up with some questions. We love answering them, and thanks for all the feedback. Cheers, guys.
See you later, all.